Good morning. It is September 3rd, Tuesday. We're 1 hour after the opening bell, and today we're definitely in the negative territory. So major indices are moving downwards. We'll see how significantly, whether or not it's significant in terms of a daily basis or if it's more chopped sideways, and what are the catalysts that might be happening in the market, and what can we really expect for the week ahead. So first thing to note is that we are in a holiday week. This is the first trading day of the week. It's a Tuesday, and we can see that volume is quite low. So after the holiday weekend, we're not really expecting a lot of volume today, probably not tomorrow. And, we've had such low volume lately that we might not even get it all week. So we really want to see what sort of catalyst we might have coming up this week. So let's take a look at our economic report. Refresh that. And nothing really happening today. ISM manufacturing PMI, they're not really going to care about that. JOLTS tomorrow might be a little bit followed. And then we've got Thursday. Yeah, nothing really going on. More jobless claims. That's pretty much been a non-event for a couple of years now. And now the employment situation. That's really where we have some potential to have volatility, to have some institutional involvement come back into the market. But that said, is the employment situation really going to bring huge waves of institutions back? It's really hard to say. Probably not, given that we're in an election year. We tend to get liquidity back in the markets a little bit later, especially after the first debate. Finally, it seems like we might be getting a Harris-Trump debate September 10th. That's what we're being told. We'll see if that happens. And that will start to give the markets a better feel for which candidate is stronger, and we might start to see some institutional plays after that. After that, we've got September 18th, we've got the Fed decision. And it looks like we're still sitting here at, 61.39. Well, we swung back a little bit more to the 50 basis point rate cut, which you guys already know what my opinion of that is. So TLT, we can see came down quite a bit on Friday. We were recovering a little, but you can see that all where we are is just basically the opening of Friday, so not that significant. SPY, mostly chopping sideways. It does look like we have quite a bit of downward bias. We did break below that EMA 8, but you can see that we are not making new lows, at least not yet so far. And if you're in the Telegram channel, you can see that there is basically expectation or gamma is building up at the 555 level and probably not much lower than that, which would just match these lows right here. So still really just chopping sideways on the S&P 500. If we look at the QQQ, looks like we are getting a little bit of downward directional movement, and we are at the EMA 20. So we'll see where we close. Can we close all the way back up above that EMA 20? At this point, it looks like it might be a little bit difficult, but so far all we have is matched this low on Wednesday. So we do need a little bit more movement downwards in order for us to start to get a little bit more pessimistic about the QQQ. Let's take a look at SMH. SMH is definitely looking worse. This definitely broke down through the moving averages, through the VWAP, and finding maybe a little bit of support maybe at the MA 150, but that's kind of a phantom moving average. No one really follows that. So or at least not institutionally. So any support we get here is probably more from horizontal support, but looks like we could go all the way down and challenge this annual VWAP and maybe even the MA 200. And if we break those, then we're looking at probably a wider market sell-off. Let's take a look at IWM. IWM, a little bit below these lows right here, so we can't really call this. And then we never really went into much of a choppy period unless we allow it quite a bit of room. So we went up, down to the EMA 8, and now through it. Looks like we might be going down to the EMA 20. So far, everything is looking kind of negative. And even the Dow Jones, which was making new highs last week, when everything else was chopping sideways. Even that is being dragged down a little bit below its EMA 8. We'll see if it stays down there. But there's definitely more of a bearish tone coming into this week, and there's not a lot of great stimulants into this market. So if we get the poor employment numbers, if it really does look like we in the employment situation is not really doing so well, and we don't get a rate cut in September 18th, or people don't like what they hear in the debates, then there is a lot of potential for this market to start moving downwards. And in fact, there's more potential. This is the same thing I was saying last week, more potential for us to have at the very least, a pullback or a mean reversion. We already had the mean reversion. So at the very least, a pullback before we might go to new highs in the S&P 500. There's just too many risk factors. There's too much going on. And we got what we wanted out of Jackson Hole. The market did nothing. We got what we wanted out of NVIDIA. The market went down or did nothing. NVIDIA's market went down. SMH went down. The QQQ went down, but the S&P basically chopped sideways. So even on the top of good news or things that we're expecting, the market is at best chopping sideways. So there is definitely more downside risk than upside risk. And all of the hedges that we did for on NVIDIA, those and the SMH, those are all in profit now. So even if it didn't happen immediately, now they are in profit. So there's definitely, I don't have it saved, but the SMH, you can see it is definitely down since NVIDIA happened on Thursday. So we can see that we're definitely what we were saying before still applies now. There's more downside risk than there is upside risk. And so we want to be neutral with hedges or neutral with tail risk trades to the downside, or leaning slightly tiny bit bearish, not full on bearish, but a tiny bit bearish. That's how we should be viewing our portfolios at the moment. So let's see what sectors are leading this downward movement this morning. And we can see that SMH is definitely leading to the downside. We've also got, interestingly enough, ITA is also leading to the downside. So defense stocks, defense were doing really well last week. So SMH was way down and defense was the top one. So interestingly, this negative sentiment is bleeding into one of the top performers last week. So what is doing well? We've got TLT, so never mind, XLU and XLP. So our defensive sectors, our most defensive sectors. Let's see how healthcare is doing. Oops. Which one of you is healthcare? Are you healthcare? Yeah. And then so the blue is real estate, healthcare right here. And we've got our XLU, XLP. So our most defensive sectors are the ones getting all the attention this morning. XLU, nice, steady, beautiful uptrend upwards. XLP, beautiful bounce off the EMA 8, continuing upwards. Let's take a look at XLV. Nice, beautiful uptrend upwards. So these are really the defensive sectors that are really the place where we want to concentrate our money if we're going to the long side, or if we're trying to neutralize our portfolio and we've got a little too much downward exposure, then we would neutralize it with XLU, XLP, XLV, or stocks, individual stocks within it. So we definitely want to be on the more defensive side. We can still be bullish, but we got to be bullish in the correct sectors. So that's definitely where we want exposure to the long side. And then to the downside, SMH. Let's take a look at what XLK was doing. What is this? No, that's industrial. XLK. Okay, sort of middle of the road today so far. Or slightly below, or definitely below the index itself. But in terms of number of sectors, well, it's number 4. 1, 2, 3, 4. Yeah, number 4 from the bottom. So we've got XHB, ITA, SMH, and XLK. So we definitely, on the shorter side, we would definitely look at, since ITA is new down here, it looks like it fluctuated and it generally is more of a defensive stock or sector, then we don't want to necessarily go too much exposure to the downside on ITA. I would stick to XLK and SMH. So looks like we're definitely moving downwards. Our gamma exposure, as I mentioned earlier, looks like we're getting a lot of attention to the 555 area. So early this morning, when we first started out, we moved downwards, and within the first 20, 30 minutes, exposure really developed in the 557 and 555 area. We did have a little bit of attention in the 564 before the market really decided what direction it was going to go, but down definitely won. We are already hit 557, and it looks like we could get 555. That is definitely possible, but most of the major move, at least in terms of what the gamma exposure is telling us, has already happened. You might have a little bit more to the downside, and then we expect to fluctuate and just chop sideways from there, for unless something really crazy happens. But on our horizon, there's no real catalysts for it. So we're probably looking at the majority of the downside move already having happened today, with the potential of going all the way down to 555. All right, so allocate accordingly, trade accordingly. Remember, today is acting more like a Monday, a rotational day. Doesn't mean that this downward movement will carry into tomorrow, but our VIX is elevated up into 18 now, and our our major indices, QQQ, is on danger of breaking downwards. SMH has already broken downwards. So far, S&P is looking okay. Like it will most likely not break downwards today. So we have a mixed bag, and we've been dealing with this mixed bag for at least 1 to 2 weeks now. So basically, we just want to stay neutral and have some exposure, tail risk exposure or hedging to the downside, because that is the major risk in the market right now. So that's going to be it for this market open analysis. I will see you in the post market.